Hi there, welcome to Nepi Invest. Have you ever held or been holding on to a company and then the CEO or a major insider of the company decides to sell some shares? How has that made you feel? Did you think that was a sell signal or do you think that was just noise? Because I think it was Peter Lynch who said insiders sell for many reasons, but they only buy for one reason. So there is a lot of reasons why a CEO or an insider, major insider, might sell some shares. Could be for taxation reasons, so they have to sell. Could be they want to buy a yacht. Maybe they're going through a divorce, or possibly they could see some bad signs in the business. Now, about 10 years ago, I did a little bit of research on this topic and I came away that when a CEO sells, usually it's just noise and there is opportunity to buy a company at good prices because there is a bit of a sell off when a CEO or an insider does sell. But I have become a little bit more cynical over the past 10 years. And I do know that a lot of companies, insiders, particularly if a company is performing badly, will take advantage of this and will sell their shares. And this is, I won't say it's a problem, but I have seen this happen a few times. So definitely when CEOs and insiders are selling, that could be a signal to sell out of a company. So this is a topic I'm going to explore in today's video. When a CEO or insider sell, is that a sell signal? The motivation of today's video is satire. I've actually done a few videos on this company, but on the 23rd of March 2022, they released an announcement titled Founder Sell Down. So straight away, the title is not, I won't say not a good look, but I knew straight away that the shares in this company would fall quite a bit on this news. So Dr. Dean Mintz has agreed to sell down 35 million shares in the company, which were recently released from voluntary escrow. It only represents 9.2% of the company's issued capital, and he still retains 56.7% holding in the company, and of course remains Cetire's largest shareholder. That's really important, the amount of shares he's selling in regards to or compared to his total shareholding. And I'll get into some research to suggest that this is the most important point or aspect of a CEO or an insider selling. How much of their holding are they selling out of? Research has been done on this, although the paper I will show you was released about 17 years ago. Whether that's still relevant remains to be seen. How did the shareholders react to this news that Cetire's founder was selling down? Well, of course, they decided this was bad news. Not only is this going to be a short-term hit to Cetire's share price, the founder, Dean Mintz, decided to do this when sentiment in the company is really negative. And I think, and no research has been done on this, in fact, I think there should be research done on this, is if a founder or an insider decides to sell when overall sentiment in the company is quite negative, I think this could reinforce that negativity. And it's definitely done that for Cetire, with the share price down another 13%, down 20.5 cents, closed the day on the 23rd of March at $1.35. I am recording this video about 1 hour after trading has begun on the 24th, and Cetire's share price is now down to $1.28. So this news that the founder has sold down, I think just reinforces this negative sentiment. I love to see some research about insiders, CEOs selling when there's negative sentiment compared to when there's positive sentiment. Would it have made a difference if the founder sold down when the share price was at its high at $4.75? I would be intrigued to see if there is a difference. I did not find any research on this. So if you are the research inclined sort of person, maybe this could be a research topic for you. Now, onto some research I did do. Now, this first paper I actually read about 10 years ago. So it is quite old. It was released in Financial Analysis Journal, 2004, the May-June edition, volume 60, number 3, written by James Scott and Peter Zhu. Some insider sales are positive signals. So I won't go into big detail or large amount of detail about this particular paper. But there was a couple of interesting things here. For instance, the future expected returns was all dependent on the scale of the sell down. For instance, if it's a large sale with a large percentage of the founders or the CEOs or insiders' overall holdings, there is a significant negative future abnormal returns. On the flip side is if the CEO or the insider is selling a small amount of shares and overall it's only a small percentage of their overall holdings, it's actually correlated with significantly positive abnormal returns. So it's actually positive if an insider is selling a small amount of shares of their overall holdings. Of course, that was one point of view written from that paper that was released 17, 18 years ago. More recently, I found some other interesting research, and this is from a few guys who are based out of Oxford, Cambridge, and Mannheim. So a couple of really interesting business there. I think this was through the SAID Business School, which is the University of Oxford. I could be completely mistaken there. And the title of this bit of research was, "Are all insider sales created equal? First evidence from supplementary disclosures in SEC filings." I'll just point a couple of interesting things in the abstract. And then the next slide, I'll just point out a few interesting comments they made in the rest of the paper. Now, this paper was released November 2016, but was revised in March 2019. So in the abstract, it just says here, disclosures to discretionary sales. Discretionary sales mean when the CEO or the insider has a choice about whether they sell some shares. Non-discretionary is when they don't have a choice, and usually that is because of taxation reasons. So disclosures discretionary sales are more likely when the legal risk of trading is high and when insiders offload a large amount of stock. Although investors react negatively to these disclosures, which I do find on the ASX, whenever CEOs do sell, particularly large amount of their shares, we do tend to react quite negatively. But in this paper, they found there is a significantly negative long-term abnormal returns over the subsequent months, suggesting that investors underreact to the negative information in these sales. So this is looking out a few months at least. So even though they do say long-term, I wouldn't say subsequent months is long-term. The previous paper was looking years in advance and found there was actually negative correlation between the company's performance over the long term and the amount of shares a company will or the insider will sell. But this paper is saying in the short term, there is significant negative abnormal returns. In fact, they say a long-short portfolio investment strategy that exploits this underreaction from investors earns an economically significant 16% risk-adjusted return per year. So what they're saying is if you do see insiders sell over the next few months, there's more likely that the share price of that company will fall. The previous paper says there is a chance that over the long term, a few years, that company share price actually will rise. The last bit in the abstract just mentions, consistent with insiders selling ahead of bad news, discretionary sales for which insider provide disclosures are more likely to precede analysis downgrades and negative earnings surprises. And this is something I found on the ASX. A lot of times you will see insiders sell, and then all of a sudden there will be a negative earnings surprise. We saw this with A2 Milk in 2021, early, or maybe 2020. So there was, when the company A2 Milk did release the half-yearly or yearly results, there was a period of time when the insiders could not sell. 1 month later, when the insiders could sell, a lot of the insiders sold in A2 Milk. And then a few weeks later, they released a negative earnings surprise. So that is consistent with what I see, but I'm a little bit biased because of what happened with A2 Milk. It's just good to see that there is a paper that sort of backs that thinking up. A few other really interesting bits of nuggets, that were released in that paper that I'll just point out here. First one is insiders might disclose supplementary information during stock sales to credibly convey that these sales are generally made for liquidity or diversification reasons and have no information value. Now, with Cetire's case, the reason why the founder said he was selling was to increase the liquidity of the company. I'm not sure I totally believe that. I have seen this reason used before in companies, but in those companies, there was a liquidity problem in the trading of the company. And when the CEO or the founder did sell, it actually did increase liquidity. Now, another problem Cetire has is the CEO has or did have a significant stake, 65% stake. That's now to 56%. I think there is a really big chance that he will continue his sell down over the next few years to decrease his percentage from 56 to maybe 30 to 25%. And that would really increase the liquidity. So that's the reason why Cetire CEO has decided to sell, because to increase the liquidity. I'm not sure I totally agree with that. I don't think liquidity is the problem with Cetire right now. There was another little bit of really good nugget released in this paper in regards to a few other papers written in 2015, which show that managers delay the disclosure of bad news when they sell stock. Hello, A2 Milk. Hence, insider sales might be regarded as bad news, especially when there is a lack of disclosure regarding their reasons. I think this is a major reason why a lot of companies now, or a lot of founders, a lot of CEOs, when they do sell, they'll put a reason behind it. And I think that's a really important thing they need to do. We need to know why they're selling. Are they buying a yacht? Are they going through a divorce and they need some funds? They need some liquidity. Is it for taxation reasons? We need to know the reason. And there's lots of reasons, as Peter Lynch says. An insider will sell for many reasons, but there's only one reason why they might buy. So we do definitely need that reason when an insider decides to sell. Whenever we see an insider, a CEO, or a part of the management team sell some shares in a company, I think there are a few things we have to mull over before we decide whether the company is a sell or a hold. So some of the things we do have to consider is the size of the sell. Is it all of their holdings? Is it a large proportion of their holdings? And if it is, that is a major negative signal. And research actually backs that up. Is it just a one-off? Has the insider just decided to sell some shares and they haven't sold any in the past? And there's a chance, or they've even said they won't sell any in the future. So if it's just a one-off, maybe for taxation reasons, I think that's not a sell signal. The other thing is, are other insiders selling? So if a group of the management team is selling, like we saw with A2 Milk a few years ago, that can be a negative signal. And just the reasoning, is there any reason why the insider is selling? A lack of reason could be a negative signal. So I think we do have to go through a lot of these. And probably the other thing we have to go through is the sentiment in the company's trading. Is the share price in a well-defined downtrend? Is there negative sentiment? And when the CEO or the insider decides to sell at that point in time, I think that is also a negative signal. But no research has backed that up that I could find. And I'd love to see some research on the sentiment and insider selling. So is Cetire a sell based off the founder selling 9%? Is it 9% of his shares or 9% of the overall holdings? He still has 65% or no, 56% of the company under his control. So is Cetire a sell? I think this is the wrong thesis at this point in time with this company, because there's a couple other things we have to take into account: technicals and the fundamentals. And when you look at the chart for Cetire, it is really ugly right now. Really negative sentiment behind the company's share price in a well-defined downtrend. And when they did release the half-year results, the market did react quite negatively. So right now, even fundamentals are looking ugly. So those are two things you have to dissect before you make a decision whether Cetire is a sell. I don't think you should be just selling based off the founder selling down some of his shares. And just to back up how ugly Cetire's chart is right now, just have a look at the daily chart for Cetire from when they listed on the ASX. The share price of Cetire has only gone in two ways since it listed late in 2020. For about 1 year, the share price went up. There was only one direction the share price was going. In fact, the share price rose from about 47.5 cents to a high of $4.75. This was a 10-bagger for anyone who bought into the IPO. Now, during that period of the uptrend, there were some gyrations in the share price, but that was just noise. You can actually put an uptrend here, and there's a definite uptrend in the share price. That uptrend came to a stop pretty abruptly in November last year. So 4 months ago, the uptrend in Cettire came to an end. And since the end of the uptrend, the share price of Cettire has moved into a well-defined downtrend with an obvious downtrend line that are depicted by that sloping black line. And the share price just keeps on falling. Much less gyrations in this downtrend. It's actually falling at a much quicker rate than the uptrend. And you do see that a lot because fear is a much more powerful emotion than greed. So that's why the share price is dropping at a quicker rate than when it rose for a year after it listed. And right now, the share price at the end of trading on the 23rd of March was at more than a 1-year low. So just on a 1-year low. So last time the share price of this company was this low was almost 1 year ago today. The question is, how much lower can the share price fall? We don't know because the share price is in a well-defined downtrend. Lots of negative sentiment around this company. The founder decided to sell down, which should reinforce this negative sentiment. So at this point in time, even if I really like the future potential of this company, I'll just hold off buying any shares until I see this falling knife play out. That's all I have for this video on whether a CEO or insider selling is a sell signal. I think there are a few different aspects of when a CEO or an insider is selling that you have to take into account. For instance, the percentage of their holdings. Are they selling 50% of their holdings, 100%, maybe 5%? And definitely when they're just selling a small percentage of their overall holdings, that is not a sell signal. If they're selling completely out, I think that could be a sell signal. There's other factors you have to take into account why they're selling. Is it just for taxation reasons, which is a non-discretionary reason? And that is definitely not a sell signal. Are they buying a yacht? Are they going through a divorce? I don't think those are sell signals. Is it a one-off? Are a majority of the management team selling? I think that's a definite sell signal as well. That's a bad sign when a majority of the management is selling. If you do have any questions about this topic, I'd love to hear your thoughts. I'm still doing research, and I'd love to see some research on the correlation between insider selling and the overall sentiment in the share price. Is there a best time for a CEO or insider to sell? Is it when there's good positive sentiment behind the share price? Or is it best to wait when the negative sentiment comes to a completion? Those sort of things. I'd love to see if there's any research done on that. So if you don't know if there's any research, just leave a link or a comment in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.